Hi, this is ETF.com's Exchange Traded Fridays podcast, a weekly podcast covering developments in the ETF industry. My name is Sumit Roy, and I'm Senior Analyst for ETF.com. This week, I'm talking with Arne Noack, who is the Head of Systematic Investment Solutions at DWS Group. Arne, welcome to the show.
Thank you for having me. Looking forward to it.
Yeah, absolutely. Great to have you. So, Arne, it's been a little over a year since the Inflation Reduction Act was signed into law. That law, of course, came on the heels of the Infrastructure Investment and Jobs Act of 2021. Have we seen a significant increase in spending on infrastructure since those bills were passed?
Yes, Sumit. So if you follow the press, you can actually read quite a lot about the different companies, in particular in the space of high electronics, semiconductors, and the likes, who are taking advantage of the different incentives for the purpose of developing. Being European, I follow the European press quite a bit as well. And actually, those acts have made some waves over there in Europe as well, because obviously a bunch of European companies, in particular in the clean energy space, now see it much more profitable or much more advantageous for them to build out something here in the US than maybe it would be in the European homelands, which I think is sort of leading to different conversations, political and economic conversations over there in Europe. So I would say both of those have definitely made an impact on the companies, on their considerations for their future plans, and I would argue are as we speak, shaping the future of the US economy and its compositions to a not meaningless degree.
That's great. So Arne, when people think about infrastructure, they think of things like bridges, highways, and airports. Those are the type of things that come to mind. But what are examples of green infrastructure?
In addition to these obvious infrastructure points, obviously, I would encourage listeners to also consider things like the energy grid under infrastructure components and the energy grid, energy production, anything in relation to that. Of course, you name it, the transportation element forms a big part of it as well. And when it comes to green infrastructure, green might be a little bit of a buzzword here, but it's ultimately these are different segments that I would argue the vast majority of countries on this planet need to consider in order to make their economies and infrastructure supporting those economies future-proof. So how can we transition, globally and here in the US towards a higher utilization of sustainable energy production, together in line with the production of sustainable energy through, let's say, wind or photovoltaics or solar energy, comes a question of networks, of utilization, because the advantage of traditional energy sources, oil, gas, nuclear, is really that you don't have to manage around peak times in terms of production. You can adjust production to needed consumption levels, and really that's really a new challenge that renewable energy brings. The sun. Yes, the US is a big country, and the sun does shine very often in some parts of the US, but there's also certain parts throughout the day when, in particular at night, when it's dark all over the US. So when that happens, essentially the production grinds to a halt or comes down significantly. So you have in the production of energy a lot of troughs and peaks, which will need to be balanced out through storage, energy storage. This is not something that is as important in the production of traditional energy sources, but highly relevant for renewables. So it's not only how to produce, but how to store energy when there's more being produced than is being needed at the time, and that can then be drawn upon when it's needed, but it might not be available to be produced. So the overall transition to more sustainable energy production, to a more, let's call it, electronically minded transportation, potentially even towards a bigger utilization of mass transportation, all of those are considerations that can fall within the buzzword or the umbrella of green infrastructure.
Very interesting. So it certainly sounds like a wide variety of infrastructure has to be built, and a lot of money is going to be spent building it. Do you have any estimates for how much investment in green infrastructure will be made in the coming years? Are we talking about trillions of dollars?
Yes, certainly needed, and the estimates differ a little bit depending on what group you listen to. But I would say, the Jobs Act as well as the Inflation Reduction Act, both are very meaningful commitments by the U.S. Government to essentially make a very meaningful first step. I would always argue, as someone I think who sees life generally a little bit more pragmatically, sometimes it's more important to take the first step, to do something, and then over time, as things develop, adjust further. So it's a little bit. I would not put any claim to fame or otherwise claim that I have deep wisdom to know how much is really needed for a meaningful transition. I think it is something where a significant amount is needed to take the first steps, and then as the first steps transpire, as they are being pulled to completion, we will know much better in terms of what else might be necessary. This is we're talking here about a fairly meaningful structural change in the coming years in terms of how our economy and its need for energy and transportation is being met in terms of significant shifts. There's a lot coming up in that sense.
That makes a lot of sense. So Arne, I kind of want to turn to now a new ETF that you just launched. It's called the Xtrackers US Green Infrastructure Select Equity ETF. The ticker symbol is UPGR. You just launched this back in July. Can you tell us about the investment strategy of this fund?
Yes, with pleasure. And thank you for picking up on that. It is one of our new launches. It's one of our new thematic ETFs. So as such, it has a relatively narrowly defined investment strategy. And as the name would suggest, it's designed to invest in areas that we surmise under green infrastructure. So as I would say before, the topics of clean energy, production and storage come to mind. The topics of green mobility, green transportation come to mind. But then also, the green elements are in terms of construction. Because obviously the construction sector more broadly has a legacy of fairly meaningful emissions, CO2, carbon emissions, and a lot of companies are revamping, rejigging their operating models to do this in a more sustainable way. So we don't as such say this is, as people like to say, an ESG product, but is very much one that focuses on investments that arguably are needed to make the US economy to a bigger degree future-proof, and as such has a fairly meaningful overlap with the two acts, the Jobs Act and the Inflation Reduction Acts that you mentioned before, and as such, we're hoping is a very timely addition to the market. We called it UPGR or upgrade on purpose. I personally quite like the ticker. I think it's, if I may say so myself, quite clever, and we're hoping that this topic and theme finds applicability with a number of advisors and our clients. And of course, as usual, if this rings a bell, if this piques your interest in some way, I would very much appreciate for you to get in touch with us, and we can walk through the nitty-gritties in a one-on-one conversation.
Absolutely love the ticker. So could you tell me, Arne, how this ETF compares to some of the other ETFs that are targeting similar themes that are out there? Things like clean energy ETFs, energy transition ETFs, environmentally conscious ETFs. There are a handful of other ones out there. How does your fund compare to those?
As they say, I personally don't like the reference too much, but the devil really is in the detail. Because when, for example, if we look at the comparison with clean energy ETFs, then really the response is that UPGR is likely to be significantly broader than clean energy. Clean energy is one subcomponent of UPGR, but not the main or the exclusive one. So I would say see it as a bigger umbrella that captures more themes that are likely required for a renewal or transition of the US infrastructure. When we compare to let's say broader ESG ETFs, some of which we also have in our range, even ETFs that have carbon emissions or the climate to some degree embedded in the investment strategy, then UPGR is likely to be more concentrated because it's not a broad benchmark product, but by design, it is a thematic product. So it has a predefined list of sub-themes that fall under the umbrella of green energy, of green infrastructure, including green energy, and then focus is on that. So as such, it's a fairly concentrated portfolio of 50 stocks. The index equally weights. So if you compare to any broad benchmark index, the like of S&P 500 or similar, Russell 1000, then our fund UPGI is expected to have a fairly significant tracking error and active share because of the high level of concentration. And then last but not least, if we compare ourselves to traditional infrastructure funds, we also differ in a sense that UPGR isn't constrained by, let's say, a GICS or ABICS definition of which company falls within the infrastructure industry group or infrastructure sector, but really looks from a revenue generation at the exposure that companies have to the individual sub-themes. So rather than a broad classification that we follow, we have a revenue look-through on the underlying companies, and that determines companies' inclusions in our portfolio.
Gotcha. So in addition to UPGR, you launched another pair of thematic ETFs in July, one focused on semiconductors and one focused on cybersecurity. Everyone now knows about NVIDIA. Obviously, that company is dominating the market for chips that power AI applications. But I'm assuming that your ETF, the Xtrackers Semiconductor Select Equity ETF, isn't just about NVIDIA. It's about the broader investment opportunity in chip stocks. So I'd love it if you could talk about that and talk about how the CHIPS Act, which passed last year, plays into the investment thesis for this ETF.
Yes, and I appreciate you bringing that up because, let's say, philosophically speaking, the rationale or raison d'etre for that ETF, for where the ticker symbol is actually CHIPS, CHPS, is very similar in a sense that clearly, as you already pointed out, under the CHIPS Act, the semiconductor industry, the production thereof, as well as the sourcing of needed materials and resources for the production of semiconductors has been identified by the US government, but by several governments across the globe as being of strategic importance for the future. Relatively easy to see why that is, because really nowadays semiconductors or the little chips that are semiconductors are really used in almost everything that is being produced. It's not only in mobile phones, but it's in kitchens, it's in general household electronics. When I say kitchens, I mean actually refrigerators, but so therefore it's all over the kitchen, even in new hobs, anything. When you think about, the buzzword of the Internet of Things, really, speakers in your house that take your commands and then switch on or off the lights, or generally everything that is designed to make our human lives, everyday lives, more simple, more easeful, is likely to contain semiconductors. And so as such, the need and demand for semiconductors has really skyrocketed. When something has such a critical position in the economic cycle, in the economic value chain of pretty much every major economy in the world, it's quite natural that almost becomes a highly coveted commodity that, likely companies will think about how to nurture and protect their own industry in that space through legislation. And similar, as we said before, for upgrade or for the future proofing of the US infrastructure, we see the semiconductor industry to be one very specific and incredibly important subset of that. And therefore, we see a lot of investors that are interested. There are already a number of semiconductor ETFs that have been launched in the past. And therefore, our thesis here, other than upgrade, which is really a new thesis and really a new product to market, chips, CHPS is not a new product. It is, as we would call, a Me Too product. And as such, our ambition was and continues to be is to be the cheapest product in the market on that sector. So when you compare us to competitors, we simply are the cheapest by way of expense ratio, according to my data.
And what's the expense ratio today?
15 basis points.
Awesome. Yeah, that definitely is pretty cheap. So obviously you talked about, Arne, how chips are very important when it comes to the security of a nation today. And speaking of security, I want to talk about your cybersecurity ETF, the Xtrackers Cybersecurity Select Equity ETF, ticker symbol PSWD or password, another great ticker. Obviously, with the world becoming increasingly digital, cybersecurity is top of mind for a lot of companies out there. But why should investors consider buying an ETF that specifically targets this theme?
It's a very similar, I would say, thesis, if you will, compared to chips, to the semiconductors. It obviously is a slightly more narrow scope than semiconductors, is looking specifically at password or at the cyber security. But really, the rationale is very similar. It's, let's say, in a world that is increasingly interconnected, such as ourselves, where vast transactions, but also everyday transactions, and in particular, if you live in New York City, even some of the most mundane things, such as going out for a grocery shop, are now being handled online. Large sums of money exchange hand on a daily basis online. All of our identities, if you will, are likely to be stored online to some degree. Most of my personal passwords are stored in some cloud, and I'm personally really hoping that cloud is very safe. And the more of our identities, the more of our everyday lives touch that interconnected world, the bigger the need is to have security in that world. I personally sleep better at night knowing that the provider of the cloud storage where my things are saved on, it takes cybersecurity very seriously and makes sure that there is no leak, that my data, my social security number, my passwords for the different accounts, they're generally the login details for things, whatever might be the case, tax returns, that they don't all of a sudden find themselves in the public domain simply because these aren't public documents. And for that, it should be a given. It should be something that we never ever have to worry about. But it's nevertheless extremely relevant. And so making investable such a relevant theme for us was important. It's in both cases, chips, password, as well as upgrade are designed to reflect individual themes that have real life applicability. And even someone who may not necessarily be too much in the weeds in financial structuring or everyday investments sees a relatively easy rationale for why those three themes are relevant, and therefore why it might be a meaningful consideration to potentially invest money in companies that are really experts in these areas.
No, absolutely. The investment theses for these funds are very compelling. But when it comes to password, you mentioned how chips, your semiconductor ETF, is kind of a Me Too product. Is that the same when it comes to your cybersecurity product? Because there are about a half a dozen other cybersecurity ETFs out there.
Yes, absolutely. So both password and chips are designed to be inexpensive Me Too products. So as I said, the same applies for password as well, with 20 basis points. According to my data, we are the least expensive option of all cybersecurity ETFs in the market here in the US.
Fantastic. Well, we're going to have to leave it there. Arne, thanks so much for coming on the show and sharing your insights with us.
Thank you for having me.
Listeners, I hope you enjoyed this episode. You can find this and all other Exchange Traded Fridays episodes on ETF.com or on any major podcast platform. See you next week.